Rajeev, weigh in on the timing, and also one more point, and maybe I'm just nitpicking, but the fact that only a little over 3% of the company is being offered, right? Overwhelmingly, it's still, the rest of the holding is still with the government. I mean, does that at all, your thoughts on it basically, does it disincentivize a potential shareholder? How would you look at it?
Certainly, Prashant. The challenge, earlier the thought was to maybe come out with a 5% or a 10% issue. And the valuation that was being talked about was upwards of 9 or 10 lakh crores. So government has done both. They have, one, reduced the size of the issue and reduced the valuation. Now, 3.5% is effectively a very, very small issue from a LIC size perspective. But perhaps the view within the government was to demonstrate or let the price discovery happen. But as you said, there is that overhang of follow-on public issues or follow-on issues here. So the challenge, what would remain is that it is, once the government sells 3.5% and lets the price discovery happen in the market, it is very, very certain that within the next year or so, there would be a follow-on public issue, which would lead to increased supply. And that is an overhang in terms of what would happen with LIC stock. And any institutional investor would also weigh that in while he's making an investment. But I'm very, very certain, and I agree with Mr. Sathe, that government would definitely have firm commitments of a very, very large size anchor book. I mean, far, far more than what anchor book is earmarked. Otherwise, they would have preferred to defer an issue of this size and this magnitude. It is a question of government's reputation. And the very fact that they are giving a discount to policyholders and retail investors, and a significant discount to that extent, will ensure that retail participation does happen. Whether people eventually gain from it, I'm sure the market will discover that. But yes, I agree that 3.5%, while it is small right now, it leaves a huge overhang on a follow-on public issue, which will determine the success of the IPO in the market and the returns that investors get out.
Actually, listening to the LIC chairman, Yash asked the LIC chairman exactly that point about, more stock hitting the market. Listen it.
3.5% is what we are doing now. But I think as per the Act amendment, it has been stated quite clearly how much holding government will have 3 years or 5 years from now, and that at any point of time it will have 51%. But how much more will be disinvested is something that still has to be discussed with the government. And I don't see it happening very soon in any case, because we would like things to settle down before we think of another follow-on public offer.
Gentlemen, our guest panel, of course, is still with us. Mr. Sathe, Rajeev and Nitin. Rajeev, I know you've looked at the valuation picture closely, so I'll give you the first opportunity to comment. You heard my colleague Abhishek describe it. What are your thoughts on how this is valued now?
So, Prashant, I think it's fairly valued today. And one thing is that whole distribution, as your colleague has already said, the whole distribution model of LIC is changing. So the increase, there will be much higher addition in the PE, the profitability of LIC. Second, the embedded value itself will rise going forward. But if I look at the situation as it exists today, we are aiming at an embedded value multiple of about 1.1. But again, if you look at all the major peers in India, you talk about HDFC or SBI Life, they're all upwards of 2.5. HDFC is at a high of 4. Yeah. But if you look at things globally, if you look at the bigger companies, the likes of AXA and Allianz, they are in the range of 1.75, Zurich, 1.89. So when we aim at 1.1, it's a fairly conservative aim. But again, I must give a sobering thought here. If you look at the large Chinese companies, the Ping Angs and the China Life Insurance, they are at 0.5 and 0.21. So, the jury is out. I would like to keep the Chinese large insurance companies out, given what's happening in China at the moment. But given what is happening with the European peers or the US peers, the valuation is fairly well reasonable. And in comparison to the Indian peers, it's genuinely reasonable. So I think government has when thought that they want to make a success out of this IPO. And that's why it's very attractively priced in my view.
Okay, that's well put. I would have liked Mr. Sathe and Nitin, your views on this as well, but I have two other points, so I'm going to go on and change topics. Mr. Sathe, one concern has been, and it doesn't get talked about, but it's everyone knows the history of kind of the government forcing LIC to do certain things, I mean, forced investments, etc. The most infamous, of course, is the IDBI one. How should potential investors look at this risk? Because it's still going to be overwhelmingly a government company. Go on.
There will be more transparency, more disclosures. There will be more independent directors who will be experts from respective fields, and they will have some skin to question the government on such decisions. I will say that you may think what is 3.5% dilution is nothing. Who are the independent directors who have got courage to question the government? But I think that doesn't happen. At least suppose there is some pressure on LIC to put money in some equity of some public sector company. And the management is of a view that it's not going to give us a return in the long run. At least chairman will have a reason to go and tell the government that I'm sorry, but my investment committee, which comprises of independent directors, will question me and I will not be able to convince them. So I'm sorry, I will not be able to invest here. Now that is not possible as of now. So let us not go into with just 3.5% what changes will happen. Changes will happen, and more disclosures and more transparency. Just take an example. Even a person holding one share will have a right to question in the AGM, raise his hand and question, why is it that you invested your money in ABC company? Now, that is something which is not happening today.
Yeah. And you're saying...
So all said and done, this will help going forward for LIC also to have better investment, better returns, and investment in such companies which will give better return. So this is what is my view.
No, absolutely. And I hope that is the case. Absolutely. Rajeev, you want to come in? But just 10 seconds.
Just want to give a counter example of BPCL, which is undergoing disinvestment. I mean, had that been the case, the fuel pricing policy would have been protested, and the board would have been taking a more rational, more prudent view. So I'm not very hopeful that what we are aiming and hoping would eventually turn out to be true.
But I mean, we'll find out in real time, right? As Mr. Sathe said, I mean, we have to go into it in a hopeful way. Gentlemen, we've barely scratched the surface because, I mean, there are so many more topics to discuss, but we only had this much time. But our coverage on this mega IPO will continue leading up. I mean, the next 5 days, we'll have the anchor book opening, and then in the next 7, we'll have the IPO itself opening for you and me, the retail investors, etc. as well. So for now, it's good. Thank you, Mr. Sathe, Rajeev, Nitin. Appreciate all of you joining us and giving us your time explaining the various facets of this LIC IPO. Well, it's a wrap on this special broadcast. News and updates follow on the other side right here on CNBC TV 18.